You go through the disclaimer already because I want to tell you what happened with iBit.
Now let me rip through that real
Let me
quick.
hear. I'll,
Do it.
yeah.
All trading involves a substantial risk of loss, past performance, not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling or trading any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade any of those things, you might lose money. There's people you can hire to help you out, but Jack and I strongly recommend you just take a personal interest in your own financial well-being and learn this stuff. It's not difficult to do. Speaking
Start
of, I
slow, start small,
yeah,
but
keep it
just
under
get started.
keep it under control. Hardest part is get started. You can plan forever, you can paper trade forever, but you should get started.
You should get started. This is going to be a great year to trade options, selling them mostly, even if the broad market doesn't go up, as you'll learn on this show. What we do has nothing to do with stocks going up. They can go up, they can go down, they can go sideways. We still create cash flow.
Dude, I got called out at 54. Look at that.
On IBIT?
Yeah.
Oh, dude, I was just going to say I got called out at 53 and I thought I hit the big winner. You dogged me by another stick. All
I
right.
got called out at 54.
I got called out at 53.
Great work, though. Great work. We both did good on that one.
Yeah. Yeah, that
Once,
that's good.
once
Uh,
again, look at that thing.
so now I what I do? I sold another some IBIT puts. I got to find those. But after I got called out, I'm taking a fresh approach. I'm not just going to go buy the stock and write a call against it. I'm going to get back in. I'm flat now to the share, but I want to keep cash flowing it. So I'm going to sell another cash secured put.
I just want to show everybody, like, if Bitcoin takes a bigger swing down, we could see this pushing on down right back to the lows
Mm-hmm.
where this thing started.
Mm-hmm. Now this thing has completely decoupled itself from everything. Gold, the stock market, every single thing. Tech. I don't know what IBIT is doing. It's just free floating, and I think it's losing a lot of interest, especially when you read about gold and silver. People are just rolling out of it because it's not doing anything. If it's not ripping like everything else, people are going to want to sell IBIT and buy GLD or SLV, right?
Yeah. But here's the
That's the
thing.
problem.
Here's the thing. Keeping it may be out of favor right now, but even if it's the worst performing asset of this year, it won't do that usually for multiple years. So having some exposure or getting some exposure back at better prices, great deals. And that's what you were just saying is that you're going to sell some puts. You're not just going
Mhm.
to aggressively buy. You're going to try to get a great price, keep cash flowing. And
Keep
even if we
wheeling.
do push lower by cash flowing, it gives you opportunity to get bigger money when we finally do recover, which
Yeah.
may not be till next year or
Yeah.
later.
Normally, if I get called out of something like this and it's in a trend, I would normally on the following day, Monday, it would be I'd buy the stock again, 500, 1,000, 100, whatever, and I'd just start selling calls again. But since this is not in an uptrend, I'm just going to think that I got lucky getting called out at 53. I'm not going to rush in to buy the stock back and sell calls because it's not trending higher. So I'm going to nibble with a little couple cash secured puts and see if I can get gifted the stock because that has been the real gift. Getting assigned for me has been just unbelievable so far this year. It happened again. I got called out of Fermi at 10. We'll get to that later. But yeah, just assignments have just been amazing.
And just in case anybody doesn't quite understand the sideways that Bitcoin and IBIT, IBIT is an ETF for Bitcoin run by BlackRock. We came up and hit the high back here in March of 24. Rewind a year. We hit the high right there. Rewind 2 years really. And we broke up through that in November of 24. We chopped in here December, January, right in this, like we've gone nowhere for a year. a solid year right here. Like here we are in January, right over here, right there's where we were. Like January, March last year. Here's where we were the year before, January, March, just below here. So really 2 years now, barely made any upward momentum here.
And that's bad PR for this because the only reason you would really want this is because you think it's going to go up. Greater fool theory, Here we are 10 years later and there's really no application for Bitcoin like people said there was going to be. There's nothing happening with it or the blockchain. It's like kind of like all dead money right now. So unless this thing's rising, it's not going to attract anything. Did the beta go down in the last?
I'm sure it has because it's been under. Yeah, it's on here.
Oh,
It's below one. You might check on your other source there. I know you
yeah.
like the.
Let me
I don't
see
remember
what
if
it
it's
is.
big charts or Y charts or I can't remember which one you
Yeah,
look at.
yeah. Big bar charts.
Bar chart.
Yeah, let's see what it says there. It's got a 2.67 beta, according to 60-month beta with bar chart.
Yeah, 60 month, but it hasn't
Yeah.
even been around for five
I
years.
know.
So,
I don't know how they do that. Yeah.
but right now it's the last 12 months, its beta's been flat, definitely underperforming the S&P
Hmm.
for the last 12 months. We crank this
Totally.
over.
And that's bad. I think selling begets selling when it comes to crypto. It's got to be fiery
I
or it
mean,
doesn't get any action. I bet the volume goes down on this thing too quite a bit if it doesn't get rocking.
yeah, just comparing the last 12 months or the last year and or 13 months really. S&P up 17%, this is down 7%. So that's a what 24-point spread? No, more than that. Yeah, something like that. 24 point. Yeah. I don't know. Craziness.
It is
Crazy.
craziness. Yeah. If I sell a put on this one, Lynn, I'm going to use the software we have that'll just tell me. I love that fact about the PXO software is it's a don't make me think type deal. I flunked ninth grade math. I still hate doing it. So we have a cheat tool that's a big cheater, and it can pull it up so fast it make your head spin. And it tells me which put I want to sell based on the ROI that I want. That's a very important thing, not just where I think the stock could go or anything like that. It's based 100% off the ROI. And so I like to shoot for something around that 36% per year. And I got that from Jeffrey. That's the goal with the $50,000 a month challenge is to hit that 36 to 40 ROI. So I just set it up in this software to tell me ROIs of 30 or 25, depends if I'm or higher. And then the thing pulls data so quick, like I say, it'll blow your mind. And you just slide down on the right side there and hit sell put, which you see in blue. And yeah, it tells you right there which one you want.
And if you don't have one that just automatically shows up, you can always use the tool here, selling puts. And let me scroll this all the way over so we can see the whole screen. And you pop in here and you tell I'm thinking about maybe 10 days out. I want to look at all the expirations here. And you can find that 49 is paying 40% ROI right there.
So I do it reverse. Instead of, I used to type in the strike and the premium and blah, 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 long-handed and figure out what the ROI was this way. Now I do it backwards. I just use this. I go straight to the ROI column and that tells me what strike to choose. And I like to do it a week out. This being a funky week, maybe you want to go out to next week, but this week still got a little cheese in it. So expiration the 23rd is not that bad.
That's, same 49 still has 40% ROI on it.
Yeah. So, I mean, and that's 3 days out. That's ridiculous that you could do that. And so it's not going to give you 39% on one trade. But if you just keep, trading that, you're going to end up with 39% at the end of the year.
which is not a bad gain.
Not a bad game. That's not the, guys blow that away. I read about it all the time, but I'm telling you, that's like a sweet spot without taking too much risk and without leaving too much on the table. And more than anything else, it's doable. He's got the proof. I do too, but I like his proof better than mine. But what we're doing is working, and we're stacking it and packing it.
And speaking about the proof, there's the call out right there that I had 54. Got put at 51.50, sold a bunch of puts along the way to get to that. Then got called out at 54 and sold a bunch of calls like this
Ma-
one along
Making
the
money on a
way.
stock that goes nowhere. That's gonna should be the title of your book.
And how does this stack up? Well, here you go. This is, if we look at the last year, this is how it stacks up. I started April last year, tax time last year. Before that, nothing. And now we're sitting at just shy of $60,000 profit.
Mm, mm, mm.
And
You
people
know,
ask me, how big of an account? Like, I took like $75,000 to start this account.
that's crazy. You're going to be at 100%. So when did we start the show? In June?
In June or July, I think it was
Yeah.
July.
Yeah.
And we've been rocking and rolling this thing because I
Yeah.
talked about Rocket Lab, and that was that everybody was like, what was that big pop in here
Yeah.
back in July? That was Rocket Lab. We started, we were on Profit Panel starting in like May, I think. And then you and I split off to do this show sometime in July, I think.
They're still crying
And
about it that we left, but
and and somewhere here in the fall, I was not happy. Like yeah, I had this nice climb going, and then in the fall, I was like, I'm kind of underperforming a little bit. I slowed down. I need to get back on it, and that's why this chart's starting to accelerate more to the upside. I'm being a little more aggressive, but still being careful. I'm just recycling the money faster, and that's important. That's how you get an account that doubles in a year. And people ask me, where's your big drawdowns? Why, here they are right here. It's not really big. And the biggest one was
no,
770 bucks. None recently. I'm about to have no losses in 3 months.
that's awesome, dude.
This is the last one I had was October 28th. So come 8 more days, this one will drop off and I'll have 3 months without a single loss.
Now, if this were 100% directional trading, that would be impossible. But selling options is so much easier and profitable and less risky, in my opinion. And this just proves it. There's no way you could have a record like that with directional trades. If you had a 60% win rate or a 52% win rate on directional trades, you'd be doing good. But just selling options, especially now, people, they're as high as I've ever seen them in my life. And that's where the money's at right there. Taking money, not making money. He's taking money.
And I do these spreads. When I do spreads, it counts half the leg as a loss and half of it as a win. But I do these spreads every day, just about on NASDAQ,
Yeah.
bringing in a little cheddar, just
Yeah.
trying to get a little bit of money on the books every single day.
Yeah. A little bit on the books every day. And so you're going to lose on that one leg. That's your hedged leg on a spread. That's you want that for protection and you expect to lose that. So you're going to make more on the winning part than you do on the losing part and net you're ahead. So the software we use there, George, that's called uh, Power X Optimizer.
It's run by Rockwell Trading. I can drop a link in the chat
Yeah,
for
drop a link
everybody.
in the chat. So the two things that this does for us is it not only gives you the exact strike you want based on your criteria, but it's the ultimate in tracking. Yeah, there's the link if you want to buy it. It's 2 Gs. But so it gives us these strikes, but if you got a second there, show them. Yeah. So every time you do a trade on a position, you got an open position there and you enter the trade and then you could see how much you've made, 20 grand, seven. How do you make on that there?
And this one's made, 2 grand realized on moving these shares from October. I haven't even sold them. I've just got put them right away. I got put in 3 tranches, and I've been selling calls against them, collected a dividend, and right there I'm up. I have to roll back down to get this specific position. Um, I brought in 347 in dividends, 16, almost 1,700 in premium. That's a $2,000 total realized using $12,000 cash right there on that particular TSLO position in my Robinhood account. And I've got another one down here that's never been put shares. I'm up,
7 grand,
well,
three,
3,500. I'm using
3,500.
using 7 grand. I'm up 3,500. I've
Yeah.
never been put the shares. Just
That's
keep rolling.
so crazy. That's the part. You got to do a little case study on that sometime about how you traded that particular account where you never touched a share of the stock. That's why I say you write the book title, How I Made $3,500 Without Ever Buying a Stock.
Now, that's 50% gains right there on the
That's
money.
crazy, man. No predicting a stock going up, no predicting a stock going down. Actually, no risk of position at all. Just using the options market to create cash flow.
And
That's amazing.
yeah, that one was TSLL. I've been on basically the same two strikes ever since September, back here when we stopped moving. And I've just been rolling forward with that, rolling it every week for September, October, November, December, January now, 5 months, I guess. This has gone nowhere. The beta is still crazy at 3.3. Still pays pretty darn good, even though it's come down from almost 4.
Yeah. I got put
And
the shares at 1850 and I'm digging it.
we got a little failure to launch here today.
No big deal. This is a better day to actually enter a cash secured put.
So it's not as low as it's been. It's just sitting in the middle. I wanted to see this take off, really. The longer it farts around right here, the less likely it is to get the big
Yeah.
possible move up to 50. But
Yes.
we do have earnings coming up on the underlying, which is Tesla, coming up right here next week on Wednesday. Should be a spicy day. There's lots of tech earnings coming out next week. Netflix should be coming out this week. If I got my dates right. Yeah, tomorrow or
I've
today.
never traded this thing.
Today, after the close, have
What,
Netflix coming up.
what's the expected move? Let's take a look at the
Yeah,
option chain.
let's pull
And
over an
here's a
option chain.
here's a great tip, you guys and gals. Might want to write this down. You might hear market maker expected move or just the expected move in a stock. And a great way to know what is the expected move is to have a little way to calculate that. And here's how you do it.
So you don't have to buy the order. You can just create the order. And what you do is you come in here, you click sell the call, and you click sell the put at the money, which right now it's at 88.69. So closest strike is 89. Just sell that call, 89, sell that put, 89 for 3 days. So this is the expected move between, this is the move that the market makers are pricing in, that most of the time we're not going to exceed this. And right now that's priced in at $6.89.
Meaning they think it could go up or down 689 between now and Friday.
Now, what's another interesting thing we can do, handy dandy PXO software here, NFLX. Come in here, and you can see they've got the expected move priced in right here. Slightly different numbers, probably. But they tell you 7% up, 7% down. There you go. So up to 95, down to 82. And that's what is being priced into the options right now. Is
It
likely
doesn't
to
mean it's
stay.
going to doesn't mean it's going to do that. It just means that the options market makers they want to take all the risk out of a trade between those two prices.
Yeah, they're basically pricing in the market to stay in between these levels. 90, 94, almost 95 and 82 on the downside. So if you could play these, you can make 30% annualized ROI if you played down to 77 or up to 102. up to 102 on calls, down to 77. So you could buy a covered call, sell that, potentially make a 30% ROI, or you can sell a naked put down here, or do a
I
credit
like that.
spread down here,
I like the
77.
put. This thing's getting beat up pretty bad. I wouldn't mind doing the put side, but I'm not going to do it because it's not in an uptrend.
That is the downtrend. It's been in a downtrend for, gosh, 8 months. And we peaked out back here in June. So July, August, September, October, November, December, January, 7 months.
Mike asks, why not do a iron condor outside both those expected move ranges? The reason is, Mike, you got to be right twice. They're
Out.
betting it could go up or down that amount, but not both. So, yeah, that's the problem with the iron condor. If
Now there's
iron
nothing
condors, if I could get a handle on them, I'd be doing them, but I don't do them. I've done them a few times, but not really.
there's nothing that says this is going to be right.
Yeah.
Yeah, that's where you make the money is when the market makers don't have this priced correctly. If you think that Netflix is beat down and consolidated for almost 2 years here in this zone and ready for a breakout, either breakout or break down, playing outside of this move for a breakout of this priced in move is where people make a lot of money on earnings.
You could sell cash secured puts on this, Dennis, but you're going to probably get the stock put to you because it's in a downtrend. And then if it goes lower, even if you sell calls, you're just going to be digging yourself out of it. I prefer to sell a cash secured put on something that's flat or trending higher, never in a downtrend. You're
And
just going to get your face ripped off.
I caution everybody this if this gets below 85, there's not really any big level down here to support it. So either we're going to hold right in here and bounce, or Netflix is about to take a bigger spill. And I don't really have any strong conviction either way.
Me neither. Don't like it. Don't see any trade in it.
And we can easily come back, very a lot of times we come back and back test the breakout, which the breakout was from this high back here in 2021. We struggled to get through right here. We went on a rip. We hit the top. And now we're coming back down pretty. That's a pretty steep fall rate there. So if we don't hold that all the way back to the lows from 2022,
Mm,
that could be pretty devastating.
yeah.
If you get put up here at 85, that could be pretty devastating if we're down here at below 20 before we make a low.
Yeah, this kind of thing, this streaming stuff, this is not my bag of chips. I don't like it.
Well, the barrier to getting in the competition doesn't seem to be very high. Everybody and their mother that has any kind of content seems to be launching a streaming service.
That's what we're doing.
And yeah,
It's just ours is free.
yeah. I mean, that's what we're doing right here, right now, is we're competing with Netflix, but we don't charge you anything. I
And
mean,
we got way better comedy in this thing too than you're ever going to find on Netflix. The only thing we don't have is Landman.
there you go. So, whether you think about it or not, you're here spending time with us. You could be watching Netflix. I mean, there you go. So right here, if we get below that, that's the next level, and then yikes, yikes.
Yeah, way better things out there to trade.
So I don't have any. A lot of times I come rolling in here, I'm like, that's got a good support right here. The problem is when you go from this low up to this high, the support level doesn't come in until down here at 61. And that's still a long way down. So I'm not sitting here going, yeah, I like this one. I'm getting in. Caution. Caution.
Caution.
Other ones that are caution are Microsoft.
Yeah.
This one can come on down to
Soft.
420 area.
So soft.
We broke down below the low from back there at Thanksgiving. That sets us up to come on this bigger, deeper move right here. I wanted Meta to hold up. I wanted it to get a little more retrace down into that 610 area, and we keep pushing on down. This is starting to be a caution flag for me that we could push on down into 560,
Yep.
go make a new low. That's, we didn't just bounce right up here at this 630, not 610. 630 is where I wanted to hold. We pushed on down to 610 now, and that starts tipping the scale that we're going to push on lower.
Yep. It's another one I'd never trade. Netflix and Meta
And
don't got anything in it.
Google did hit that 337 and it's bounced down, but it's holding up really well today. Still has
Holding
upside
up real
potential.
well.
Still has upside potential up here at 380 if we can hold up in this zone and push higher again.
I'm long
385.
Goog. Yep.
Yeah,
I'm long it.
385. Amazon chopping in here a bit, may come down for another visit of the roadmap line, but this does have the upside target activated with this price action that we did right here. We made a high right there. We made this low right here. We activated the entry right here. This purple line, 75% likely to go get hit. But that does leave 25% chance that we come down here and make a low lower than this low from back here at Thanksgiving. So 25% chance it fails, but 75% chance we're going to go up here to 265. So, Jack, you and I don't usually rip through all the Mag 7 stuff, but there's some interesting opportunities showing up in here today.
Yeah. I'm still liking Goog. I'm not waiting for a real turnaround in Amazon.
And Apple here came up just shy of the 1272 extension. We hit that 1448. Look at that. The high was all the way back here in December of 24. So 2 Decembers back. The low was down here, Liberation Day. We came back up, hit that 1448 target, the 75% likely. We kicked off the entry back here in August. We hit that here in December. So it took September, October, November, December. It took 4 months to get there. Got it. Now we're pulling back. We're back to the roadmap line right now, my orange line. If we can hold on to that, we could potentially come back on up to hit the 1272 at 190 or at 292. If we don't hold on to this though, we break down through this uptrend of lows. This can kick off a bigger retrace. That 220 area will be the next support, and then we could take a trip all the way back down in here.
Have they fired Tim Cook yet?
Not yet. I mean, as far as I've seen, he's still the boss. So.
Are they going to replace him?
You're the one that's been talking about it. Now I have no idea.
Yeah.
I mean,
He's been a dog. If I was on the board, I'd get rid of him.
he's just not been. I don't know. That's just not been getting the stock ripping. This is. It was actually. I was reading something like it was the first time we've had 7 weeks of downside in a row ever in the history of Apple stock.
Yeah, he's got to go. Complete lack of innovation.
That's 7 consecutive down weeks. That's the first time that's ever happened. So I don't know. Whatever.
John Dillon, check your email. I sent that out this morning.
GLD just keeps popping.
I think I got lucky in SLV
Yeah.
because that sucker, man.
You got out on that drop on the daily chart, and
All I did though was I got in as a debit spread for 50 cents and I got out at 60. So, I made a little 20%, but I'm going to do it again. This is just things don't hold up like this. I mean, my timing was perfect, but lucky. I didn't have any real stats to back up my trade. But here again, I'm going to do it again.
what's amazing on silver, 121 is a real possibility here. And if we just go catch up to gold, 300 is a real possibility, which would be up here.
Yeah, I did a debit spread to the downside on silver.
See, gold went ripping all the way up here. And if silver catches up, we'd be up here right around 300.
And that's the beautiful thing about the debit spread. If I get my head ripped off because I'm wrong, the most I can lose is what I put into the trade.
Yeah.
So if it's a grand or 10 grand, I'm good with that. I just don't want to, like on a short position, which I've done before. When I was running my fund, that was the worst loss I ever took because instead of doing a debit spread on that stock, which, compare that here, if I shorted silver at 85 and it goes to 220, I'm out. The game over. I'm going to get a margin call, everything else, and I'd be done. After 40 years, I'd let one trade wipe me out.
See, if you were trying to short it at 85, you'd be just for 30 days exposure, you'd be spending $7 here.
See, that's the price when they price that expected move. It has to make a move bigger than that for you to make any money because you're already paying. People don't realize when they buy an option, they're already paying the expected move premium. And when you're selling, you're taking money away from the market maker. He wants that money. He wants to sell it, right? You're taking money from him. Buying, you're giving him money. Selling, you're taking the money.
See, they're expecting a $15 move in silver between in the next 30 days. It's either
Yeah.
up to 100 or down to 70.
Yeah. But if it hits 100, like you say, it's going to attract even more buyers and more shorts. And that could get really hot.
So what Jack's talking about doing right here is rolling in. You could even do a 50-cent wide one. And you're looking at, buying the put, selling the lower strike put. Right now that's a little rich actually. It should be closer to 25 cents for a 50-cent wide.
But you think about that. That's $30
Yeah, $30 exposure to try to,
for a chance to make what, 120 or more.
well, it'd be 50 cents, so it'd be chance to make 20 cents profit. So it's 60,
Not quite a double.
it's like 60%, 80%. Um, but then you can go a dollar wide, cost you 55 cents right now, with the potential to make 45 or 40 cents now. It's jumping around. So it depends on how aggressive you get filled here. If you go in at 55, you try to get filled at 55, you could make 45 cents profit. And that's almost a 1-to-1. And Jack and I commented like to close for 20, 30, 40, 50% of the profit right there. Now these are not bull call spreads. These are bearish debit spreads.
Yeah, we're paying to get in here.
This is
So
a this is a debit. It does cost you money to get in. The max profit is the dollar wide minus whatever you pay to get in. So $45 would be the max profit.
what I like to do, Mike, or people that are following along here, is if I buy this on a good till can if I buy it and I get filled, I'm going to turn right around and add 20 to 50% to what I paid, and that's going to be my sell order on a good till cancel basis. And if it doesn't hit that, I'll just take what I can get in the end rather than just let it expire worthless.
Now, if you're bullish, you could flip this around and do it the other way.
Yeah, that's what people are doing. Now that's a great point, Jeffrey, because show them how much less expensive it is to do a debit spread up for the upside.
Now, this is what if you got a credit spread here. Now, if you wanted to play it a debit spread using calls, you limit your risk to 40 cents.
Instead of $750, right?
Yeah,
You pay
instead
that
of
ask, you're in the middle there, you're paying $750. That's rich compared to $40, and you can still get a big bang for your buck. That's why the debit spread is so much more advantageous than the straight up call buy. It reduces the price ridiculously and it gives you great upside.
and you could still put $800 in this, right? That I
Yeah.
mean that you're not
20.
limited. You could buy the same. You could put the same exposure. You could put $740 in it. If we put, let's say 750, you were saying was the mid, so 750 divided by $40 per contract. We are just going with a 40 because it was 40. You could buy 18 contracts. Your max profit, $60 upside. So 60 times 18 contracts We're talking about $1,080 upside, and all it has to do is go to 87.
Isn't that cool? And it doesn't have to go to 120. It just has to make a little bitty move.
That'd be 144% return, and all it has to do is go up to 87.
Isn't that
And the net.
cool? I love that, dude.
So that's the advantage of doing a debit spread right there,
Yeah.
especially if you can get one for less than the mid. When I say the mid, when you take two strikes, you cut it in half. If you can get in below
50.
50 cents for a dollar wide, it really opens up the upside. Now, what the market's kind of telling you here a little bit is that they're pricing in the market makers are telling you they're pricing in a drop, not further pop. And that's where if the silver market continues to pop, that's where the opportunity is because the market makers aren't pricing in further upside.
Neither is Jack. Now take a look at that take a look at that chart, and let's take a little vote here, a non-official vote. Jeffrey, I'll let you start. Now, do you think this goes higher or lower?
You
By
know, with
next
the
by next Tuesday, we'll say.
by next Tuesday, I was pricing out a month right there, but by next Tuesday, I the way this has been going, we keep making higher prices over the weekend. So I'm thinking we
All
might
right.
be higher. We might
Okay,
be higher.
Pete DeBrock says higher. Jeffrey says higher. Jack says lower.
And the market
Just
makers are
because
saying lower, and
that is not sustainable. Just by a naked eyeball in the thing using no lines, no technical analysis. To the moon, Alice Bodine says. Gregory says much higher. Neil lower. Hey,
and this is
Chris
this
nails
is what
it. Trump fears continue. It goes higher.
this is what makes a market too.
It'll be higher in a week, and in a month it'll be lower.
Maybe.
Higher until the hedge trade is over. Jacob says, "Yeah, that's right. They're pushing it now." But
Well,
you
well,
could replace that ticker symbol with any other symbol, and if I see that kind of chart pattern, my money's on the downside because that is not sustainable.
the dollar took a big spill today and helping push gold and silver higher. So this is one of the things at play here. People talk about dollar dropping and the market popping, but it's really dollar dropping and commodities popping and pushes commodities higher. So if this is one thing to watch is if the dollar continues the downward setup that it's got in place, gold and silver are probably going to continue higher, at least until the dollar here makes a lower low than it did in September.
That's an interesting correlation. I don't think the average silver player looks at the dollar.
So yeah, I don't think so either. I just, it's it's the one thing that's kind of correlated with commodities. And people all the time say the dollar is correlated with the market, but it's not. It is, however, correlated with precious metals and commodities.
Interesting.
So eventually gold and silver is going to run its course, but right now it doesn't appear that's been the case. Now, another thing playing out too is that the dollar is no longer the most held reserve currency for global banks. It has become gold and silver. And that trend is accelerating, not decelerating. This is counter to what's been the thought process for the last 40 years in the market. The dollar being the reserve currency, but right now gold and silver has now become the reserve currency, the more held reserve currency.
Going all the way back to Nixon now, taking
Yeah.
us off the gold standard.
So Nixon's little plan may have run its course.
Oh, that's funny.
It's a little experiment here, taking us
Yeah,
off the gold standard may have
tricky
run its
dick.
course.
Yeah, that's
Uh,
funny. Yeah, may have run its course.
I'm just saying, like it may have run its course, and we may be back to the historical thing that's always held value, gold and silver. So I don't have a crystal ball. I'll just kind of
So
throw ideas out there.
I sold one of my cars a couple months ago, and the guy came and bought it. He paid cash, and a real high roller type dude, and he's talking about all the gold that he has. And this is maybe 6 months ago. And he's going on about the gold, and he says every time they start printing more money, I just start buying more gold. And I'm thinking, you know, so GLD, right? That's the gold play for me.
Yeah.
And he's no, no, no. I'm buying the real gold. And I'm like, well, where do you get it? Oh, I buy some at Costco. I buy some from the coin guy by my house. And I'm like, really? And I said, well, where do you put it? And he says, well, I put it in a bank, in a vault in the bank. And I'm like, wow. And so what do you think is going to happen? You think there's going to be a time when you can actually use that gold for currency? And he's like, oh, the way we're going, probably. And I said, I don't know, man. I think the guy that's got the most bullets is going to end up with the most gold. Just stick a pistol in your face when you're coming out of the bank and there's your gold. And then I said, would you ever consider selling the gold? And he's like, oh, I don't know, maybe. And I said, well, just consider GLD. You can buy and sell that for no commission. The very second you buy gold, you're paying up. And the very second you go to sell all that gold, let's say you take 50 pounds of gold into the dealer, he's going to clip you for 10 or 12%, right? Or more. So, wow, it is a tough, yeah, unless you're in Cambodia, it's a tough way to deal with gold. GLD, I think, is a much cleaner, sweeter, cost-free play than actually paying to store it in a bank, and then I wouldn't be caught dead running around with gold in my car, you know?
Yeah, what's crazy is, when things go sour and we're only like as they say, like 10 meals away from absolute chaos. Once people get hungry, uh all rules are off.
You
If
know
you
what
got
else about that? It won't be like, the Depression. My old man had pictures of the Depression when men were calmly and politely lined up in a soup line. That'll never be the case in our society. And you find out there's a soup line, man, people are going to go, people won't behave like they did in the Depression. They were like emotionally depressed, is why they stood calmly in a soup line. They looked like they were beat down. You put people in that position now, man, forget about it. It'll be wild. Yeah, New Orleans. Yeah.
Yeah, they just somebody just walks up with a, as you say, a gun.
Yeah.
You brought gold to a gunfight, and you
Yep.
know,
Done.
you just one click, and you don't have the gold anymore.
Over.
Yeah,
Yeah. Yeah. That is my friend here in Florida. He's talked when I was in Colorado. He's always like, "Oh, do you got some cows and chickens and you set up like a bunker and all that?" I was like, "Man, you do that out in Colorado, and someone's going to roll up on you with a lever action, and you got no more cows, no more chickens. It's all about who's locked and loaded, not who's got cows and rice and corn stacked up."
yep. PHYS. So GLD, run by Spider, has failed its audits over and over and over. Paper gold. The Sprott Fund. We talk about ETF brands that are trustworthy. Sprott has passed all of its audits and actually has the physical gold in vaults to back up
Oh,
the paper gold.
oh wow, really?
So if you want one that's less likely to have hiccups or problems, PHYS is a better place to park money, and it's a lot less expensive. So I'm
Expensive
just throwing
then
that out there.
as an
Expensive per
alternative
share
as alternative to.
as a alternative to GLD.
Oh, yeah.
GLD has failed its audits over and over and over,
Oh,
and it
no
costs.
kidding.
Yeah, they don't have the physical gold to back up the paper that they've issued under the
Wow.
ETF. It's leveraged almost like 30 to 1.
Oh, wow. I didn't know that. I thought it was spot.
They price it as spot, but they don't actually have the physical gold. If worse came to worse and they went through some sort of liquidation, um, they don't have the physical gold to back this up.
As Gregory says, only the professor would know these details.
But PHYS does have the physical gold to back up the share price. And
Now,
actually, it trades.
I imagine you reading, one in the morning, you're laying in bed with the light on, you're going through the audit.
Hey man, I do
I
use
see it.
tools to
I
help me
see
find this stuff. I don't necessarily dig through all this stuff myself, but
It's
this
okay. You can admit it. You love reading all that stuff. It's fine.
and this one does trade below the NAV. So you're actually getting a discount to the physical gold.
Wow. Little hedge, little arbitrage.
Yeah. So just throwing it out there as a possible potential way to take advantage of gold that not everybody talks about right there. And
Yeah.
silver, they have a silver ETF too. The way you can find these, just type in SPROTT into TradingView. Here's your physical silver, PSLV, right there. Same thing. The SLV ETF has failed its audit. It's run by the same people as GLD. And PSLV actually has the physical silver to back this up.
You think people care or they just want to play?
I don't think, I'm sitting here talking to a room of how many people? 154 people. Did anybody else in this room know this?
No.
And did anybody else care?
Uh, no.
So that
No,
kind
I
of tells
think
you that kind of tells you
they don't care. They're typing in no. Mike says he cares. No and no, Lori says. Carol Eccles, she's probably the gold standard for responses. She says no. Oh, Dan
yeah.
says yes and yes. Yeah, people like this nerdy stuff.
So yeah, it's just one of those things. Like, what's a black swan event that can, if you're holding silver SLV over physical silver, if you're holding SLV, what's one of those things that can blow up in your face? I guess this is actually run by
Mhm.
BlackRock. The fact they don't have the silver to back up the shares that they've issued under the bucket system, they don't have the
Mm.
physical silver that can blow up this ETF. But PSLV has
How are
the
they
silver.
moving? Let's lay one chart over the other to see if it's even worth playing one over the other.
And they're right now they're moving
Tick for tick. Yeah.
pretty one for one there.
Yeah, that's good. But in a
Any
black swan event, you'd want the PSLV.
yeah, and some sort of like hiccup of liquidity where redemptions were taking place, you would want the PSLV because that
Yes, you would.
silver is there.
It's kind of shocking that iShares failed the audit and nothing happened. They didn't comply and get the underlying gold.
It just there's not enough of it out there to get is the problem.
Hmm.
So they've just quietly that's like the dirty little secret in the precious metals market is that GLD and SLV fail their audits
Interesting.
and nobody talks about it. So anyway,
Yeah, it cost them a lot of money to probably pony up and get straight, right?
but you got to
This
not only do
price.
you have to obtain all the silver, but you also have got to store it somewhere and pay for security and auditing and authentication and all that other bull crap. It's expensive and it eats away at the value. You'd rather just manage the, it's kind of like the way iShares runs iBit. You'd rather just not spend a bunch of money on on anything that you have to store anywhere and just
Yeah. Well,
and just,
that's the beauty for BlackRock is why this is the most profitable ETF they probably have is because it's Bitcoin. There's no cost. They get $1 to buy the IBIT. They spend the dollar on the Bitcoin. There's no expense, no security, no bank, no nothing.
I guess they have to get a little vig to Coinbase or whatever, but I'm sure they've got a sweetheart deal worked out between them.
All right, Bubby, take a look at Fermi. The
All
gift that
right.
keeps on giving. Now I got called out at 10
Ooh, look at that. You
over
can
the
buy it right
weekend.
back. You can buy it right back.
Well, here's the thing now. This is really interesting is that the chains have really become more popular. So I told you before there was only a $10 strike, a 750 strike, and a 5 strike. Now there's all kinds. of
I
different
got
strikes you can use.
you got
And
50 cent strikes in here.
yeah, and I don't remember if they changed to weeklies. They only had monthlies. Now they got them in 50.
Yeah,
Yeah, now they got
we
weeklies
got
now. That all just changed this week. Last week they didn't have them. So this is getting my attention more and more because before I could only play with this dog once a month. Now I can do it every week.
it's starting to look interesting now.
They took the $10 away from me. My cost was $7.95, so I let them have it. And I think I sold. Well, I still had some stock that I was long, and I sold a $10 call against that. And I sold the 850 puts. 850. I mean, just wow.
Yeah, that's the. I mean, that 750 is coming in for the 30th at 109% ROI.
I'm loving this thing. And again, I love it, folks, because, for $700, you're in the game. Or if you do
Yeah.
a cash secured $5 put, you're in for 500. Yeah,
You
look
did
at
the 850 for this Friday? That's
Yes,
159
I know.
159% ROI.
Talk to me, dog.
I might have to go throw a couple of those on just to
Just a
you,
couple. You know
you
what I
may be
mean?
sucking me in on this,
I
man.
am sucking you in. Yeah, I know. I'm the dark side. And again, folks, this is exact opposite of everything I do. There is no trend here. This is 100% pure speculation just because I think it's a turnaround situation with a terrible story. Everybody's getting sued. The company's getting sued. The board of directors getting sued. Underwriters getting sued. Yeah, this has been a big bunch of junk. People say it's just a business plan. It's not even a company. Yeah, but I'm loving it. I'm loving it because the cash flow opportunity on very little money. Uh, I don't know what the beta is. It's not old enough to be have a beta, but man, just the cash flow this thing up and down. Good stuff. Yeah, I'm selling cash secured puts, and I still have a little bit at 7.95 that I sold more $10 calls against that.
Yes. Let's see. Edit order 22 cents. Let's see if I can get filled.
And that's good. That's what I got.
Yeah, I just wanted to get.
25. I got 25 this morning.
I think I'll let this thing cook for a little bit, see if it'll.
Yeah. Yeah, I got 25 cents for that. That's ridiculous.
It's coming back down a little bit. Let's see if it'll fill me.
I like it. So I'm knocking that one around, and I'm loving Vert. VRT, I'll tell you, that thing, I sold the 185 calls today for a buck 42. That's
Yes,
just is
it's come off of that over a little
yeah,
bit, pulled
yeah.
back a little bit.
But look at that. So I'm in this at 177. I'll take the call out. If I don't get called out, that 140 is fat, man.
Yeah, I mean that's
Fatty.
let me see, where did I put the PXO? Let me see. Uh, got too many windows popping around here. Yeah, that was VRT. Load. Yeah, it's not gonna tell me that. Yeah, the call. All right, 9250 is sitting at 30% ROI.
Hmm.
You did the 187.50
I did the 185.
or 185. Yeah,
I don't mind getting called out. I'm in at 177 and I'm not falling in love with the stock. I'm just falling in love with the cash flow. So I'm wheeling this one.
that's a 53%
I
ROI right
tell you, man,
there.
these are fat premiums. They look mispriced every time I look at it. They don't look right. That's too much money.
Well, they're pricing in. Let's see what the ERT. We got pricing in here. Almost a 3 on the beta.
Hmm.
Oh, sorry, that was EPS. 1.15 there. Yeah, it's moving down a little bit, but yeah, it seems like it's pricing the beta higher than the options are priced. Let's see what
I think so.
Yeah, look at that term
Looks
structure.
wrong. Yeah. So you're
That's
getting more for the 1 week out.
that's where the money is right there. And then going a month out, but 2 weeks out, not where you want to play.
I don't know if there's a calculation to see if they're mispriced, Dennis. They just, when I eyeball it, that looks high.
So mispriced is one of those like option trader things. Like you've been trading options a long time. You get a feel for the way things should be priced. When you come in here and you check out beta, you check out the way that the price action has been going. It's kind of like TSLL. Like it hasn't been trending yet. The options are priced ridiculously.
Yeah.
That's like a
Mispriced.
mispricing, um, and it provides opportunity.
Yeah.
And right now, Jack's saying that this, based on the fact that it hasn't really moved since October, like we're still at the same place. Like look at this.
Yeah, to
You
pay me
run
for the 180, man, that's
you run that over there. That's October 15th, January 15th. So November, December, January, 3 months, it's gone nowhere. Those options should be dead, really.
I'm telling you. And they hold up too, like even into Friday. This one in AVGO, I think, always has mispriced options. Uh, Even on a Friday when, like I'll have I sold some AVGO.
Yeah, I
I
guess
sold the 342.50 put there.
the big deal on it's a 36% price range. So the price range has been giant compared to the actual price of the underlying.
Hmm. Hmm.
And that's what probably provides the juice in there. Is just these candles are freaking huge. I bet if we put
Yeah.
the ATR on there, it's just ridiculous.
It's not such a good uptrend, Chris, and Vert. It's just this one's been working for me for a while. I kind of got a good handle on it. Some I can't get a handle on. I let them go. If I got a good handle on it, I tend to wrestle with it.
Yeah, it's been moving an average of $8 a day. Back here, it was moving an average of $12 a day. That's a pretty big move for a $175 stock.
Yeah, it is.
Did you see the news on AVGO?
No.
They're gonna have 3 times a week options expirations starting next
Oh,
week.
yeah. Not only them, a bunch of stocks.
All the Mag,
Microsoft.
all the Mag
Yeah.
sevens.
Yeah.
IBIT is in there too. AVGO. It's just too bad they didn't add TSLL.
Yeah, I know. That's going to be really cool. That's running on the back of the zero data expiration options. Now we'll
That's,
have, what is this now? Monday and Wednesday?
yeah, they're gonna have 3 day a week options for now, and they may pull it up to every day later this year.
I would
So
love that. There's all your stocks right there. You
it's
could write them
Tesla,
down.
Nvidia, Apple, IBIT, Amazon, Meta, Broadcom, AVGO, Google, and Microsoft.
Now, of those, I just trade IBIT, NVIDIA, AVGO, and Goog. I don't care for Microsoft or Meta or Apple, I think is dead. And Tesla, we use TSLL, but those aren't getting more options.
So what's the it's more options, more volume, more excitement, more money to make. That's the implication. It's more excitement. There's more things that open the door.
More opportunity, more mispriced options. Like, so these, when I see on these, is I see they're going to hold up bid prices even on out of the money options all the way until Friday. Like a lot of times with AVGO, you'll just see it's out of the money and it's over $1, and even on Friday, and maybe then it goes to 68 cents and it's still way out of the money, and then the price just crumbles in the last hour. So yeah, this one invert, I just see the fattest options holding up the most when they shouldn't.
And so we already have something like this going on GLD. In case anybody didn't know, we already have three times a week expirations.
Let's see that AVGO. It wasn't down that much this morning. I sold the 332.50 put on AVGO for Friday, and I got exactly $3.
332.
332.50.
It's up to $5 now.
Ooh, wow. I might have to do this one again. Wow.
So, and remember, next week is when those options kick in. So
I cannot wait for that. I mean, so instead of doing it once a week or for the next week out, now we can be doing it 3 times a week. Even one day on Monday, you could do for Monday.
Yeah, it's
Man,
gonna it's gonna it's gonna get spicy.
oh, we're gonna just make there's gonna be more money. So stay tuned and tell your friends to show up and stay tuned and watch how we take advantage of these 3 time a week options.
I
It's
don't
gonna
have a
be
big
amazing.
plan yet, but it's gonna be you
I
know,
do. I'm gonna do, 1 to 2 day credit spreads. I'm gonna do naked calls and a lot of naked puts.
well, that opens you up. You know, you on Google and AVGO, you've been doing those like get in Tuesday, get out Friday. You know, this opens it up. You could do this like almost every day.
That's what I'm saying. My head starts spinning when I saw that. I
So
know
this,
you could. You could do it every day for that day or the next day, right? But
yeah,
3 times, wow. I'm gonna have to come up with a good plan.
this is gonna get it's gonna get spicy because
Gonna get active. Yeah,
the volume's
yeah.
gonna spike up in these right here.
And a lot of times when you look at some of these options, like especially with zero DTE, they're kind of mispriced in that they have to have a higher price or there wouldn't be any action in them. And sometimes the weeklies are a little bit mispriced relative to the monthlies. So I see a whole lot of fat premiums coming up.
Yeah,
And that starts
and
on the 26th, right?
yeah, that's supposed to be next week.
This has
That's
gone nowhere. And I've been cash flowing this thing pretty good here. It's done nothing. Nvidia, same thing. It's almost like the bloom is off the rose,
and
but the cash flow ain't.
that news came out Friday after the market closed, everybody.
Yeah,
So this
yeah.
that was kind of a surprise gift after the market closed.
Yes, it was.
And
I love it.
look at my little gamma exposure heat map here. It's just not giving me a lot of data on AVGO. There's just no big levels that I would.
It's
So
soft, man. It could go all the way back down to where'd you have it? Three,
310's got the
310.
biggest level, but that's these numbers are nothing actually compared to how much money's in AVGO. So I don't think the options are actually controlling that stock at all, is my bottom line here. It just, you know, total gamma exposure $37 million, which is nothing. A stock like AVGO could trade $37 million in a blink.
Yeah, half an hour.
And this is, really for gamma exposure, SPY, when we have billion-dollar levels, that's where I think the money really starts mattering. And it looks like we have an 800, $0.8 billion level here for Friday. And we pull over to today. There's just no big levels out here today. Like there's just no interest in this. We have a 600 million level here, and QQQ. Last week I tried to play that downside, and we just it never materialized, and it happened today. So gamma's not always an indication of which way the market's going to pull. We have a 615 capping us in today on QQQs, and nothing on the downside. So we're just not seeing a lot of conviction in here at all for options today. So yeah, just not seeing much. And so, Blake, I know you have a replay of the special I did yesterday. Blake and I came in and worked yesterday, Jack. We missed you.
I heard that
Did.
you had a raging success.
Yeah, it was pretty popular. And we're going to play a replay for those of you that
Congratulations.
took the
Yeah.
day off and went to the parade yesterday instead of hanging out with Blake and I.
That's right. Because we know, and I know we touch on this in the presentation, but with everything changing, the SIBO opening up those weekly options on the Mag 7. What was it again? Monday expiry, Wednesday expiry. Is that right, Jeffrey?
Yeah, Monday, Wednesday. We'll have Monday, Wednesdays, and Fridays now, starting next
Nice.
week. And I'm going to upgrade the system to take into account those, because this system we're going to show you takes advantage of those and SPY, QQQ, and
Mm.
IWM with the daily options already.
We're going to
And
be busy. We're going to be real busy.
Yeah.
I'm gonna be putting my nose to the grindstone, making more, upgrading the code as soon as those options come out, and
Cool.
it's gonna be spicy.
That's
You
right.
do the coding and I'll do the trading. So, I can't wait to see what you come up with. All
That's
right,
right.
Blake, let him have it, baby.
Here
Talk
we
to you
go.
guys tomorrow.
Talk to you soon. We'll see you.
Talk about here, all the trades have the benefit of hindsight.